Welcome everybody, this is George Veter, Veter Financial, and first of all I want to greet you into this new week and new month as we start into May. It's been a anxious 4 months of the year so far, and so I think this is a good time for us to try to put everything in perspective as a corporate family. And so I'll share with you my thoughts, and I'm grateful that you take time out to listen to me. First of all, the world has some stressors right now that is, everybody knows, I think everybody knows, has been reflected in the market, really in all parts of the market. But we have the war in the Ukraine with Russia, and we have China and their pandemic issues and the slowdown in manufacturing in China because of their continual battle against COVID. And then we have the United States working on controlling inflation through rate hikes and the concern that the Fed might raise too far too fast. How do we survive a moment like this? To define a bear market, actually, that's a 20% market decline from the peak or the previous high. Bear markets, on average, don't last very long. The average bear market over the years since World War II has lasted 289 days. So less than half a year. And that's a tough period of time to live through because everything gets very negative before it starts getting positive again. Then also, another reality is that when the bull market resumes after a bear market period, or certainly a bear market feeling like we have now, it lasts a lot longer. Here's some things that I want to mention as kind of a survival kit to get through this moment that doesn't feel good to any of us. Understand that we are prepared. We're properly diversified. Everybody that is my client will have at least 8 different themes in your portfolio, and we use ETFs and actively managed mutual funds in those themes, which will have about 100 securities per theme, right? So we're massively diversified. The second thing is we are managing the portfolios, making smart moves, not emotional moves, okay? One of the things that we have been actively doing in non-IRA accounts is tax loss selling, which means if we have something that's below its cost base, so it is a unrealized loss, if we go ahead and trade that investment for a similar investment and then lock in the loss when recovery comes with whatever the replacement is, so if it's an ETF, we put you in a similar ETF representing the same theme, you will have net gains, but you will have realized the losses during the dip. The other thing is, I want you to know in distributions, we are smart in the way we're distributing money. So many of you are already retired, and it's stressful to be taking money out of an account that's getting hammered with this difficult market environment. But we do have help. Whatever cash you have in your accounts, plus bonds typically are not as volatile as stocks. So as stocks go down further than bonds, we're able to trim the bonds to create a better balance in our portfolio and use those for distributions. The other thing is that we have to maintain our long-term objective and not change our minds about our game plan when we have a lot of fear. We have to conscientiously work on being positive because we're going to get a lot of negativity given to us. Not only does the media get negative when we're in world crisis mode, but also we have our friends and our relatives that are scared and making mistakes with their money and encouraging you to do the same. And we have to resist that pull to do those things. So we want to communicate constantly with our clients and give you the faith and help you to stay positive and stay the course. The other thing that we want to make sure that you know is that we watch every position every day. And in this particular market experience between January and now, we have had very little difference between small caps and bonds. Large cap value and large cap growth, everything's kind of went down together. Now things are settling now. Foreign investments, domestic investments, they all look about the same year to date. They're all down a little over 10%. Now we want to be communicative. We're staying calm. We're staying focused on making sure that we keep your portfolios properly managed through this moment. And we will be here to communicate, to calm you down whenever maybe your nerves are getting to you. And we'll get through this moment like we've got through the rest. And we will see the inevitable bull market return. And returns after one of these are always the greatest in a 10-year period of time or any time span that we would tend to look at. So hopefully some of that was helpful in perspective, and I would love to communicate with you more. I hope this gets over as soon as possible, but regardless of the time frame, we're going to do the right things all the time and going to help you get through this period of time so that we can get back on track to achieving all of our goals. So thank you again.